Hey everyone, and welcome back to the Deep Dive. Today we are diving deep into the world of BlackRock.
Yeah, a name that's been all over the news lately and sparking a lot of debate for sure.
For good reason, too. I mean, we're talking about a company that manages over $10 trillion.
A sum so large it's almost impossible to comprehend.
Yeah, $10 trillion. That's like more than the GDP of most countries.
Mm.
It's really an incredible amount of financial power concentrated in one place. And, our listeners want to know more about what that actually means. So we've got tons of research here ready to unpack how BlackRock became this financial giant, what they actually do with all that money, and whether we should be excited, worried, or maybe a bit of both.
It's a really fascinating story, and to understand it, I think we need to start with the rise of the index fund. It's a crucial piece of the puzzle.
Okay, so index funds, I've definitely heard of them, but I'll be honest, I'm a little fuzzy on the details.
Yeah.
So how do they actually work?
Okay, well, imagine you're at a buffet, but instead of picking individual dishes, you just take a small bite of everything on the table. That's basically what an index fund does. Instead of betting on individual stocks, you're investing in a whole basket of companies,
Yeah.
like the S&P 500. You're essentially taking a slice of the entire stock market.
Gotcha. So instead of trying to pick winners and losers, you're just kind of riding the overall wave of the market.
Exactly. And that's a big reason why they've become so popular. Lower risk, more consistent returns. And it's way cheaper to run for asset managers like BlackRock because they don't need these huge teams of analysts constantly researching and picking stocks.
Makes sense. Less work, less risk, and still the potential for good returns. Seems like a pretty attractive approach, especially when you're managing trillions of dollars.
And that's precisely how BlackRock rose to prominence. Index funds became their bread and butter, and this passive investing strategy is a key part of their story.
Okay, so passive investing index funds. Got it.
Yeah.
But it seems like there's got to be more to the story, right? I mean, managing $10 trillion, it's got to be more complicated than just picking an index fund and calling it a day.
Oh, absolutely. There's a lot more to unpack, and that's where things get even more interesting.
Okay, I'm intrigued. Lay it on me. What's the next layer of this onion?
Well, this massive scale of passive investing combined with BlackRock's sheer size leads to something called universal ownership.
Universal ownership.
Hmm.
Okay, now that sounds intriguing. What exactly does that mean?
Think about it this way. Because BlackRock manages so much money through these index funds, they end up owning a small piece of almost every major company out there.
Wow, really?
From tech giants like Apple and Amazon to energy companies like ExxonMobil, they have their fingers in almost every pie.
It's like they're this giant financial octopus with tentacles reaching into every corner of the economy. But is that a good thing or a bad thing?
That's the million-dollar question, isn't it? There are definitely arguments on both sides.
Yeah.
On one hand, you could argue that this universal ownership actually encourages long-term thinking.
Yeah, how so?
If you own a piece of everything, you're incentivized to make sure the whole economy does well, right?
Yeah, that makes sense. You're not just focused on one company's success, but on the health of the entire system.
Right. But on the other hand, some critics argue that this kind of setup actually stifles competition.
Okay, I'm listening. How so?
Well, let's say BlackRock owns a chunk of every airline company. They don't necessarily care if one airline outperforms another. They're happy as long as the airline industry as a whole is doing well.
So there's less incentive for individual companies to really innovate or fight for customers because they know their biggest shareholder is basically invested in the entire sector anyway.
Exactly. And that lack of competition could potentially lead to higher prices for consumers, less innovation, and a market where a few giant companies dominate while smaller players struggle to survive.
That's a pretty sobering thought. And it makes me think about all the talk about corporate consolidation and, the growing power of big business.
It's all connected. BlackRock, with its universal ownership model, is right at the heart of those debates. And it raises some big questions about the nature of capitalism in the 21st century. Does this massive concentration of power ultimately benefit society? Or does it create new problems?
It's definitely something to think about, especially as BlackRock continues to grow and its influence expands.
Hmm.
So we've talked about index funds, passive investing, universal ownership. What's next? What other key piece of the BlackRock puzzle do we need to understand?
Well, let's add another layer to this. Let's talk about shareholder voting rights.
Oh, yeah. That's something I've always been curious about. So I own a few stocks,
Hmm.
not a lot, but, I get those notices in the mail about shareholder meetings and voting.
Right.
But how does that work when you're talking about BlackRock managing trillions of dollars worth of shares?
Well, it gets pretty interesting. You see, when you put your money in a pension fund or a 401k, which is what most people do, you're essentially giving up your individual voting rights.
Really? So I technically own those shares, but I don't get to vote.
Not directly. Those rights get bundled up and passed on to the asset manager, which in many cases is BlackRock.
So they end up wielding the voting power of millions of individual investors,
Mm,
even if those investors aren't directly making the decisions themselves.
precisely. They're acting on behalf of those investors, which is a huge responsibility. Now, the question becomes, what do they do with all those votes?
Yeah, exactly. Are they using that power to push for changes that benefit everyday investors? Or are they just siding with corporate management, even if it goes against what individual investors might actually want?
Well, that's where the real controversy lies. Studies have shown that BlackRock, along with other large asset managers, often vote in alignment with company management, even on issues that might be contentious.
Hmm. So they're not necessarily using their power to rock the boat too much.
It's a complex situation. Some argue that siding with management is the best way to ensure stability and avoid unnecessary disruptions. Others say it gives corporate executives too much power and reduces accountability.
It definitely raises questions about whose interests are truly being served when these voting decisions are being made. And it makes me think about something else. I've heard a lot about BlackRock's connections to the government. There's been a lot of talk about that lately.
Yes, that's another crucial piece of the puzzle. They've definitely had a number of high-profile people moving between their company and government positions.
It's that whole revolving door between Wall Street and Washington that always makes me a little uneasy. Like, is it public service or private interest? Where do the lines get blurred?
Right, it's a valid concern. For example, during the 2008 financial crisis, BlackRock was actually hired by the government to help manage the fallout.
Wow, really?
But then they also lobbied very successfully to avoid stricter regulations on their own industry.
It's definitely one of those, interesting moments. Makes you wonder if there are some potential conflicts of interest there.
It's something to consider. And it leads us to something else that's really fascinating. The self-audit loophole.
The self-audit loophole. Okay, I have no idea what that is, but it sounds kind of shady.
It's a bit complicated, but essentially it allows BlackRock to declare themselves as passive investors.
Passive, even though they clearly hold a massive amount of influence.
Exactly, and this self-designation exempts them from certain regulations that would apply to other financial institutions.
So they get to benefit from the scale and influence that comes with managing trillions of dollars, but they avoid some of the stricter rules that were put in place to prevent things like, financial crises.
You see why people are concerned. It raises questions about fairness, transparency, and whether the current rules are really adequate for dealing with institutions like BlackRock.
It's mind-boggling to think about. So we've got this incredibly powerful company wielding trillions of dollars, influencing markets through passive investing, and this universal ownership thing, potentially stifling competition, wielding enormous voting power, and all while being deeply intertwined with the government.
And that's just the beginning. There's still a lot more to uncover.
Okay, well, I'm officially hooked. We've laid the groundwork. Now let's dive even deeper into the implications of all of this in part 2 of our BlackRock Deep Dive. Welcome back to the Deep Dive. If your head isn't already spinning from part 1, get ready, because we're about to explore the implications of BlackRock's power.
Yes, it's time to tackle the so what of all this. We laid out the facts. Now we need to grapple with what those facts actually mean.
Right, because BlackRock isn't just this abstract financial entity. Its actions have real-world consequences for all of us.
Exactly. Their decisions impact markets, industries, and ultimately our everyday lives.
Okay, so let's start with maybe the most practical concern. Our wallets. We talked about how BlackRock's universal ownership might stifle competition. So how could that actually translate into real-world impacts for consumers?
Well, think about it this way. Imagine you're booking a flight. If BlackRock is a major shareholder in all the major airlines,
Which they probably are.
they might not feel as much pressure to offer competitive prices because they know BlackRock is invested in the success of the industry as a whole, not necessarily in one airline winning a price war,
So I end up paying more for my plane ticket.
potentially. And it's not just about prices. Lack of competition can also stifle innovation. Companies might be less likely to invest in new technologies or develop new products if they don't have to worry as much about beating out the competition.
So less innovation, higher prices. It's starting to paint a bit of a bleak picture.
Well, it's not all doom and gloom.
Okay, good. Because I was about to get really depressed.
There are definitely counter-arguments to this. Some economists argue that BlackRock's size and influence actually promote stability in the markets.
Really? How so? I'm having a little trouble seeing the upside here.
Okay, well, they argue that BlackRock's long-term investment horizon makes them a stabilizing force. They're less likely to panic and pull out of the market during a downturn, which can help prevent things from spiraling out of control.
So it's like having a giant anchor in a storm. I
I
can see
heard.
that.
And they also argue that their focus on corporate governance, pushing companies to be more transparent and accountable, can actually be beneficial for investors in the long run.
Okay, so not all bad. It sounds like there are potential benefits to their approach, too. But still, that concentration of power, it's a little unnerving.
It's definitely something to pay attention to, and it brings us to a bigger discussion.
Okay, hit me with it.
What kind of capitalism do we want? A system dominated by a handful of massive asset managers like BlackRock, or one with a more diverse ecosystem of players?
It's a huge question, and probably one that doesn't have an easy answer.
It's a question we need to be asking ourselves, though, especially as we think about the future of our economy.
And speaking of big questions and things that make people uncomfortable, let's talk about the elephant in the room. You know what I'm talking about? Those BlackRock conspiracy theories.
Ah, yes. The shadowy cabal controlling the world from behind the scenes.
I knew you'd know what I was talking about.
Mhm.
It seems like every time BlackRock is in the news, those conspiracy theories start swirling again.
Well, it's understandable why those narratives pop up. BlackRock is so big, so influential, it's easy to imagine them pulling all the strings.
Yeah, I get it. But come on, surely it can't all be true.
Of course not. But I think it's important to distinguish between legitimate concerns about their power and, full-blown conspiracy theories.
Okay, so where do we draw that line? How do we make sure we're thinking critically and not just getting swept up in fear-mongering?
I think it's all about being discerning, evaluating the evidence, not just blindly accepting everything we read online, especially when it comes to these really complex financial topics.
So less scrolling through Reddit, more reading actual research.
Exactly. We need to be informed and engaged, but we also need to be thoughtful and critical thinkers.
Okay, so let's shift gears a bit. We've talked about the potential downsides of BlackRock's power. But are there any solutions? What can be done to address these concerns?
Well, one idea that's been gaining traction is stricter regulation.
Okay, makes sense.
Remember that self-audit loophole we talked about? Closing that gap and making sure asset managers like BlackRock are subject to the same level of oversight as other financial institutions could be a good start.
Seems fair to me. If they're playing such a big role in the system, they should have to play by the same rules as everyone else.
Right. And some experts are arguing that we need to encourage more competition in the asset management industry.
Yeah, we talked about how it's basically dominated by the big three. BlackRock, Vanguard, State Street. Maybe breaking up that concentration of power would be a good thing.
Right. Create a more level playing field, give smaller players a chance to compete.
And hopefully that would lead to more innovation, more choices for investors.
Exactly. And this next idea is a little more radical.
Okay, I'm intrigued. Lay it on me.
Some experts are proposing that we rethink the entire structure of shareholder voting.
Whoa, okay. That's a big one.
Right. Now, remember how individual investors essentially give up their voting rights when they invest through pension funds and 401ks?
Yeah.
What if we gave those rights back to the individual investors?
That's a really interesting idea.
Yeah.
I mean, it would give everyday people a much bigger say in how these companies are run.
Exactly. It would empower individual investors
Yeah.
and potentially shift the balance of power away from these massive asset managers.
I love that idea.
Oh.
It definitely aligns with what we try to do here, the deep dive, empowering people to understand these complex systems and make informed decisions.
It's definitely a conversation worth having. And even if we don't completely overhaul the entire system, there are still things that we as individuals can do to make a difference.
Okay, so actionable steps.
Mhm.
I like it. Give me some ideas. What can we do right now to make sure our money's being used responsibly?
Well, first and foremost, we need to stay informed. Keep reading, keep researching, keep asking those tough questions about how the financial system works.
Knowledge is power, right?
And when it comes to investing, really think about your values and priorities.
Like, what's important to me? What do I want my money to support?
Exactly. Are you passionate about environmental sustainability, social justice, good corporate governance? There are investment funds out there that align with those values.
So I'm not just stuck with those, big generic index funds.
You have options. And you can also support organizations that are fighting for things like financial transparency and accountability. There are groups out there pushing for stricter regulations, greater competition, a more democratic system of corporate governance.
So we can vote with our dollars,
Yeah.
we can support organizations doing good work, and we can use our voices to demand change. It's empowering to realize that we're not totally powerless in the face of these giant institutions.
Exactly. It all starts with awareness and a willingness to engage. And that brings us to another really fascinating aspect of BlackRock's power,
Okay, what's that?
their influence on global issues like climate change.
Oh, yeah, we can't forget about that one.
It's a huge topic
Yeah.
and one that deserves its own deep dive. So that's exactly what we're going to do in the final part of this episode. We're going to explore BlackRock's role in the fight against climate change.
Welcome back to the deep dive. We spent the last 2 parts of this episode exploring the vast and often complex world of BlackRock, from their rise to power to their potential impacts on markets, consumers, and even governments.
We've covered a lot of ground, but there's one more crucial piece of the puzzle we need to examine.
BlackRock's role in the fight against climate change.
Right, exactly. We've talked about their financial might, their influence on corporations, but what about their impact on the climate? That's where things get even more interesting and complex.
So BlackRock has been making a lot of headlines lately for their climate initiatives. Like, they've pledged to invest more in sustainable companies and push the companies they own to reduce their carbon footprint. But how much of that is real action, and how much is just PR?
That's the big question, isn't it? There's a lot of debate about whether BlackRock is doing enough and whether their actions are truly making a difference. Some environmental groups argue that their efforts are too little too late. They say BlackRock is still investing heavily in fossil fuel companies, which kind of undermines their climate commitments.
Yeah, I can see that point. It's hard to take their climate pledges seriously if they're still profiting from the industries that are driving the climate crisis.
And there's also the issue of their voting record. We talked earlier about how BlackRock often sides with company management when it comes to shareholder votes.
All right.
Well, critics argue that they're not using their enormous voting power to push companies to adopt more ambitious climate targets or to transition away from fossil fuels more quickly.
So it's one thing to talk about sustainability, but it's another thing to actually use your influence to force real change. It sounds like BlackRock is walking this tightrope between trying to please climate-conscious investors and, not upsetting the companies they own.
They're definitely in a tricky position. They want to be seen as leaders on climate, but they also want to protect their profits and relationships with the companies they invest in.
It seems like they're trying to have their cake and eat it too.
It's a tough balancing act, and not everyone believes they're doing it successfully.
I guess it's a reminder that even with all their power and influence, BlackRock is still operating within the current economic system, a system that's still heavily reliant on fossil fuels and not exactly known for its quick embrace of sustainability.
Right. It's like they're trying to steer this giant oil tanker in a different direction.
It's going to take a lot of time and effort, and it might not be pretty.
But the question is, can they do it? Can they use their size and influence to really shift the system towards a more sustainable future? Or are they just going to keep making incremental changes that don't really address the root of the problem?
It's a big question, and one that we'll have to keep watching closely to see how it plays out.
And it's important to remember that BlackRock is not this single entity with one unified voice. They have a huge number of investors with a wide range of priorities. Some are pushing them to be more aggressive on climate, while others are more focused on financial returns.
So it's like a microcosm of the larger debate about climate action, balancing economic interests with environmental concerns and trying to figure out how to transition to a more sustainable future without causing too much disruption in the process.
And it all comes back to this fundamental question of power and responsibility. How do we ensure that these massive financial institutions use their power in a way that benefits society as a whole and not just a select few?
Well, we've covered a lot of ground in this deep dive into BlackRock. We've explored their rise to power, their influence on markets and the economy, and their increasingly important role in the climate debate.
And I think the key takeaway here is that we need to stay informed, engaged, and critical. We need to keep asking those tough questions, holding these powerful institutions accountable, and demanding a financial system that works for everyone, not just a select few.
Absolutely. Knowledge is power. And the more we understand about these complex systems, the better equipped we'll be to advocate for change. Thanks for joining us on this deep dive into BlackRock. We hope you found it informative and thought-provoking. And we'll see you next time for another deep dive into a different topic.